Hey everybody, Jim Malone here. It is Friday, and it is time once again for Dallas Trading Floor. Well, thanks for dropping by to take a look. Some interesting stuff going on today. Tesla just unveiled the new Model Y, and the stock is up 8%, which is incredible because it's already been up just tremendously. So, I'm going to talk a little bit about that today. Also going to talk a little bit about Bitcoin and the sort of the Bitcoin bubble and how to benefit from the Bitcoin bubble. Bubbles are not something to be feared. They're something to take advantage of because they are movements in a price that can sometimes be very beneficial if you know how to play them. And I'm going to talk a little bit about that today as well. So, let's just kind of get into the slides here. Just kind of give you sort of a general idea on on the general market direction. Basically we have moved. We're still in an uptrend. The Nasdaq is up, so is the S&P and the Dow, which is kind of amazing. It's pulled off a little bit since a little bit since this morning. So. Of course, the big move, of course, is that Tesla moves above 800. So that's kind of an exciting thing, and it's the kind of thing that possibly it even could go higher. I've been moving my stop loss up. I currently have it at 770. Tonight, I will probably move it even higher because I do expect there might be a pullback, and obviously, you want to capture the profit as it goes up. So. That can be very, 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 very beneficial for everybody out there. So let's take a look at the Nasdaq Composite. And this is important because this is essentially where all of the tech companies live. The Nasdaq Composite is sort of a tale of two cities. The top 100 of it, basically the Nasdaq 100, that's where all the big techs live. There's been some movement out of these stocks, such as Apple, Microsoft, something like that. They're not quite doing as well as they have been in the last few. But the other part of the Nasdaq seems to be doing quite well. So we seem to have more of a sort of a rally that is moving from some of the top tech stocks, which were pretty much during the year they were pretty much getting most of the love. Now we're getting some more action in some of the other Nasdaq stocks that are a little bit smaller than that. So, but as you can see, we're still above 13,000, and we're up 74.88 today. And this is amazing because it's just been going up pretty much every day since this looks like this election thing was resolved. So, it is actually I think the market is doing a sigh of relief. Now, here's the thing we got to remember. The jobs report came out today, and unfortunately, they were not as good as we normally would like to see it. That can be, and so I do expect that, come Monday, we may see a bit of a sell-off, but a little bit. I don't think it's going to be a major sell-off, but I do think that we may see some weakness. So, we kind of want to keep that. The reason I go over these directional things so much is because it kind of gives us an idea of sort of when to move into the market, when to move out. I still think it's okay to move into the market. I wouldn't be on margin right now. I'd be very careful about that. But I do think that, there are ample opportunities, and I do think we're still in a confirmed uptrend. Matter of fact, I know we are. So that is a good thing. Just want to take a look at the S&P 500. Of course, these are the 500 largest companies in the market, and it is moving nicely. It's up 13.85 today, or 0.36 in most of these stocks. 2/3 of these stocks are basically the small banks. Now, hopefully, well, I don't know if it's hopefully or not, I do think we may see some inflation. If we do, that will benefit the long-suffering small banks because, the interest rates have been so low for so long that many of the banks have had trouble, basically had trouble because higher interest rates typically mean more profits for the smaller banks. So that is definitely an issue. But the S&P is up nicely, and so that in and of itself is a good thing. Now, I want to talk a little bit about Bitcoin. There is a lot of concern, I think, in the markets that there's so much liquidity that they're pushing into the market. There's so much quote unquote free money out there. It has to go somewhere, and that may spark some inflation coming into the new Biden administration. So Bitcoin is getting a lot of interest, as well as gold and that kind of thing. Bitcoin is a little bit different than gold in that gold can be controlled essentially by central banks. Matter of fact, they're the primary owners of most of the gold bullion, but Bitcoin itself is independent from that. Is it the coming thing? I mean, who knows? But I do know that it's becoming a more serious investment alternative for many for many people, even on Wall Street. One of the ways that I invest in Bitcoin is through the the GBTC, which is the Grayscale Bitcoin Trust. It's up 3.5% today, and it's just been going, as you can see, it's just been kind of moving higher pretty much every day. It's a lot of relative strength of 99, so it's in the top 1% in terms of stocks in the market. I've tried to be adding to my position. This is an ETF and not a stock, so it holds about 4% of the world's Bitcoin, and I do think that this, may for many people present a good alternative. It's definitely what I'm using to invest in Bitcoin because it's very liquid and you can get in and out of it quickly. As you can see, there's been significant volume here. So that in terms of that in that sense is a good thing there as well. So I just want to kind of give you sort of an anatomy of a bubble. Now, every period of time has its bubbles, and it has its bubbles. I kind of want to show you this chart. It's a very interesting chart that I saw today, and I just think it's kind of interesting. Things go up, and then of course they spike, and then sometimes they come down rapidly. But I think we're in a period where Bitcoin might be one of those, but we can benefit from a bubble. So I kind of want to give you a show this chart. I think it's a very interesting chart in that it kind of shows bubbles. Now, back in the 70s, and of course I'm old enough to remember that, believe it or not, that's kind of dating me here, there was a lot of inflation, and gold basically went, essentially up 400% in a period of about 2 years, as you can see. But then, once that inflation came under control, boom, it kind of crashed and came down to earth. Then, in the late 90s, we thought that the world was coming to end and only Japan could make money. Now, I was actually in graduate school at that time, and the Nikkei went up, and then it peaked, and then it came down, and by 1991, it basically had come back. Do you know that it's been 20 years? Many of the Nikkei stocks have not returned to their prior highs that were made about 1990 there. It's kind of interesting. Then, then there was the bubble in Thailand. Of course, this ended. But this is when I started going to Thailand, by the way. Well, it's right before I started going to Thailand. Excuse me. And that was a very interesting period of time. Then came the first tech bubble, and of course, I don't know if we all remember that, but I was trading Microsoft, and basically, I was sold out in 1999, and I didn't buy Microsoft for 18 years later. It was 2017 was when I started actively trading Microsoft. So that was the tech bubble. Remember that? That was a big deal. Then we had, starting with the free money again for the housing. Remember that? I don't know if you know that. There was the housing bubble, and that came in, and then basically it all crashed with the credit default swaps, and basically in the 2006 timeframe. Now, fortunately, that's when I came to Dallas, and I was able to buy 2 houses, no money down, believe it or not. And of course, after that, those doors closed. Then we had the first China stock bubble, and it pulled back at 2009. Now, will we get that again? I don't know, but it does look like we may be peaking in some of the China stocks because they're being delisted. Stocks like BABA. So who knows what's going to happen? We may be in a secondary, bubble. Then in 2013, we went into the biotech bubble. There was a lot of interest in the biotech. All these things, come back, but we went up and then we came down. So now, starting in 2019, along with the FANGs, remember the FANGs? They're starting to pull back now. I think we're going to see the FANGs pull back, and when the FANGs start pulling back, then I think that bubble will shift into Bitcoin. As you can see, it's up almost 1,000%. So how can we make money in Bitcoin? Well, as money continues to flow into Bitcoin, by investing in things like the GBTC and pushing that stop loss up, eventually it's going to pull back, and hopefully we'll capture some of that profit. So I just thought that was kind of an interesting, these were sort of interesting charts to kind of show you sort of the history of bubbles. Now, here's a stock that I don't think is a bubble, and of course that's Tesla. And the reason is because I do think that we are moving towards autonomous vehicles. I think that's going to be a big deal, of course, and I think electric vehicles obviously are going to be a big deal as well. Today, this is just a chart today, the volume in Tesla is up 65%. What this means is that basically the weekends have been shaken out of the stock, and people are not selling it, so therefore it's pushing it higher. It's up $54.25 today. Now, will it hold this 870? Who knows? I think it's pulled back about $20. I'm going to be putting my stop loss up to right about 800, maybe 795 or 799 tonight. I have them at 770 right now. I've been continuously moving up my stop losses. And as everybody knows that's been watching the show a while, I am a Tesla bull. Now, the difference with Tesla is it's based on a fundamental shift in American industry and world industry, actually, and that is from the internal combustion engine to the electric vehicle. Now, will that affect all vehicles? No. We're going to have internal combustion engines around for a long time. But I think the days of the pricing power of oil are starting to move beyond us. So with Tesla, there's many different ways that we can fuel these cars, because electric can be made out of many things, from natural gas to solar to wind to hydro. A lot of different ways we can make electricity. So this kind of decouples transportation in a sense from the oil prices, which is very interesting as well. And I think this is potentially this could be this could be very inflationary, actually, but who knows? But anyways, just wanted to show you this. Tesla currently has a relative strength of 99. Now, is it a good buy at this point? Well, I think that we want to see it pull back a little bit, but I do think it's moved to the top of a new buy zone, and I think that's from about 800 up. So this thing could actually go above 1,000 this year. Many of the weekends have been shaken out now, and a lot of the people that are holding it long term. So that is one of the reasons why that Tesla is sort of seems to be moving higher, and it could move higher and move a lot higher, actually. Just wanted to give you a rundown of kind of what I'm holding now. I've actually reduced my number of holdings. I'm basically only in a few things currently. I may widen this out a little bit, but of course I'm in Tesla. This is probably my biggest position. I have multiple positions in multiple portfolios with Tesla. I also, of course, have been in GBTC, which is the Grayscale Bitcoin Trust. I just started a new position in Freeport-McMoRan. This is a gold mining company, one of the largest and very well capitalized. Now it's off a little bit, so hopefully, I didn't pull this trigger too quickly on this, but I do think we're going to see some inflation, and I think some of the gold miners may be good places as well. I'm in Progeny. This is a very interesting in vitro fertilization company, basically in vitro fertilization insurance company. Kind of a strange thing, but it's done quite well. We will see. It's up about. It doesn't show it here, but I'm up about 10% or so in a month on this one. So looking pretty good. And also Blink Charging. And this is one of the stocks that I'm very interested in, because they have 23,000 electric vehicle charging stations, and they're one of the leaders in this field. They also just signed a deal with Burger King, which allows them to put charging stations at Burger King. So you go figure. But anyways, it's doing quite well. Quite a thin stock, not a big stock. I started buying this at about 10, and we're up to about 43. So we'll see if it goes any higher. But any stock that can, any double, a stock that can double and then double again in 6 months is I'm interested in. So hopefully I can find some other ones and share for everyone out there. So thanks again for taking a look at the little preamble. So let's kind of get into some of the questions, and thanks for holding on. So let's see. First question. Got out of Tesla at 865. Should I get back in? Wow, good question there. Yeah, really good question on that. I can't really advise you on that, but let's go to the chart for Tesla, and just kind of look to see if that is indeed something that we should be looking at. So let me pull that up here, and there we in Tesla. There we go. So I'm going to show you the chart. This is going to be the weekly chart first. Of course, we always try to look at the weekly first. Really, it's just really taken off since from about here. It's just kind of moved almost stratospheric. So let's look at the daily. Let's kind of see when this came in. Yeah, it's just been moving up. Now I do think we're going to get a pullback, and the reason is because no stock can. What happens is this is a blow off top. So we probably want to wait for a pullback. I do think we're going to see one, just because it just this kind of an angle. It's sort of like a plane, when it's going up. It's sort of almost at a stall here. Doesn't mean that it's not going to continue to go up, but I do think we're going to see it pull back. What I'm going to do is I'm going to be pushing up my stop losses, and then when it pulls back, I will hopefully reap some of that upside benefit. And then, of course, when it removes, when it bases and then comes back in, I'll be right back in it as well. But to do this, basically, you want to push up your stop losses and keep them within about 2.5% of the closing prices. So in order to figure that number, you're going to take the closing price of Tesla, whatever that is today, and multiply it times 0.975, and that'll give you a 2.5% margin on where to set your stop losses. So should you get back in? I think you should, but let's wait for it to pull back. I think it may be a pullback to, see if there's support at the 800 level before you get in. Don't. It probably is too soon. It's probably too soon to get back in. Let it pull back. It's what's going to happen with Tesla is it's going to move higher, and eventually it'll pull back and settle. So, but definitely keep your powder dry. There'll be another opportunity for Tesla, I think, coming up really quickly. So, yeah, want to definitely look at it like that. All right, let's take a look at RKT. Thank you for thanks for that kind comment. So appreciate it. Thanks for watching. RKT. Let's see if I can bring a chart up on that and take a look to see how we're doing. And that's, of course, Rocket Mortgages. I think Rocket Mortgages. Let's see. Okay, let's take a look at this chart. And again, we always want to start out with the weekly chart. So I'm going to switch over to that weekly view. We're going to take kind of a look at it. Well, unfortunately, this is just not something I like to see. We have a downward trending. We have a downward trending chart here, unfortunately, and it's just we don't really if we're in this thing, I don't think we want to be in this anymore. So I would recommend, Zon, I would recommend possibly if you're down more than 7.5%, I would probably sell this. Why? Because some of the things here are just not that bullish. We have a relative strength of 5. We do have increasing sales, which is good, and we do have nice fund ownership, but unfortunately, we just have too many weak hands that want to sell. I mean, even though the IPO was at 18, I think that the downward trend is there. So, I think it's time to get out, unfortunately, of Rocket companies. I think it's time to do that, unfortunately. And I do think we're coming up. It may be more difficult for some of the. With the rates potentially going up and inflation, it may be more difficult for some of the mortgage companies. So who knows? I mean, who knows what's going to happen there? But if I was down more than 7% in, I would probably cut my losses. You always want to cut your losses at about 7% because that allows you to recover better. Hi, Jim. What about Plug and Run? Let's take a look at Plug. I like Plug Power because it's sort of, it's sort of in the general narrative of, this kind of this switch. PLUG away from some of the the more traditional fuels, so I do like it. I mean, and this chart is an excellent chart. So let's look at that, Alex. Here we go. This is a weekly chart, and boy, 99 relative strength. We have the only concern I have is that we have earnings in 18 days. That's a little bit tight. We have very nice, we have very nice. Movement in the sales. Always want for growth stocks, we want to see sales that are moving up, and that definitely is the case. So let's see if we can do a smell test on this one and see. Well, it's 7 out of 9, so that's really pretty good. And let's look at those funds. We always want to make sure that we have lots of fund sponsorship. The reason is because it's not us individual investors that move the market. Unfortunately, it's the funds that move the market. So as the funds go in, that's where we want to be. We want to kind of be following along like the big whales. We're kind of like little minnows, and we're just in there. We're looking where those whales are going. We're kind of just following along with them. So definitely got that case going on here. Let's see. Is there a place that we could buy this? The problem, with all these great stocks is that, you're like, wow, I'd love to buy this, but they're so far extended. I don't think we could buy it right now because we've had this gap up. We've had this tremendous gap up, and that's a great thing. But let's see if we get it. Let's see if we get a consolidation right about this level. So currently, it's it's at 53. Let's see if we get consolidation around this level. See if this thing may have peaked out. It may have pulled back. Don't know why this is going on for Plug Power, but I think it's in sympathy with Tesla. This is just going crazy. So unfortunately, you can't buy this one at this level, and it sucks because it came out of this base so nicely. This is a sort of a cup base, as you can see. It came right out of that and it just roared up. That's typically, obviously the best place is when it breaks. To buy it is when it breaks this neckline here, but you don't always get those opportunities. So I'm afraid you're going to have to wait on this one for a better pattern that we can buy. It's a little bit too far extended. It's going to pull back a little bit, but it's still it's an excellent stock. Just I don't think you can, probably buy it at this level. If it's gapped up like that and it's moved out like that, then if you buy it, you're really in danger of it reversing lower on you. So unfortunately, you can't. It's too far extended. You can't buy it. But let's wait. Maybe there'll be a base pattern that happens, and that will clear up things. Now, I think run is a little bit better opportunity for a buy. RS rating is 99. Now it's moved above the first stage cup with a base at 82.42. So let me put the buy point out there for everybody on chat, and that is run, RUN. The buy point on this one is equal to, let's take a look, and it says 82.42 on that. 82.42, and this is a first stage cup cup formation. So, can we buy it here? Well, I would like to buy it within 5% of that level. I think we're a little bit too high, and this is just, it's going to be tough to buy it at that level because you see it's consolidated here. Here's what I would try to do. Let's see if it pulls back to about, let's see if it pulls back, to about the 90 level and see if it consolidates there. If it does, then we possibly can go into it. There's a secondary buy point, basically at 74.14, but it just didn't even give you a chance. It got into this cup, and then there was a little micro handle here, and boom, it just went straight up. This is why sometimes the only way you can buy these is when they have this cup formation. You buy them with a buy stop limit order. So you buy it as it's moving higher. With this one, I think we're going to have to wait to see if there's a consolidation at right about here. And if there is, we might have another bite at the apple. But right now, unfortunately, and I'm 2 for 2 on this. This is a great watch list stock. It's a great stock. I just don't think you could buy it right now. It's a little bit too far extended. All right, Jim. I do a post-mortem, and many of the stocks have gone into grow after I was stopped out. Oh, shoot. Seems to happen after I ratchet up. Any rule of thumb for ratcheting up? Good. Very, very good. This is going to happen to you, unfortunately, a lot. Because if you're looking and you're buying stocks that are right, they're going to pull back and consolidate before they go higher. So here's what you need to do. You need to kind of look at the closing prices and start to adjust your stop losses. Initially, when you start out, I like to start out with a 7% stop loss. But then I like to look every night at the closing prices, and I like to see kind of where the support is. Typically, because there's so much programmatic trading, you will see you will see support basically at the 21 and the 40-day line. I like to set depending on how hot the stock is running, I typically like to set my stop losses slightly below these two levels. Now, so if you want to do it looser, I would set it just slightly below the 40-day moving average. And on the charts that I'm showing you, that is the red line. Sometimes it will pull back a little bit. I do believe, though, if it's in a confirmed uptrend and it pulls back below that 40-day line, and then it can move lower depending on things. So this is one of the toughest things to learn, and you never get this right. You're always trying to set that stop loss right. But I do recommend stop losses because it's just in my investing career, without stop losses, when I not use stop losses at all, I was totally at the mercy of a stock that would reverse and sometimes just fall out of the sky. So it's one of those things. I typically like to get into a stock and then move the stop loss up, and then eventually come to a point where I'm essentially even on that stock, and then from there start to move the stop loss up. So even though sometimes I get pullbacks, I don't make as much money, I will be protected. But this is a very tough thing to do, and it's good that you're doing postmortem. That's going to help your trading tremendously. So I applaud you. Hi, Jim. I'm up 4K in one account, 45 in another on Tesla. Nice. Where do I see the stop loss? Okay, thank you very much. Yeah, Christian, this is exciting when this happens. This is very, very exciting. I'm going to kind of pull up the Tesla chart once again and kind of look at the daily chart. I do think we're going to see a pullback. Because we've run up so quickly. But the question is, where is that? So let's look at the daily chart. We're just at the very top of the range. I'm going to look at the 60-minute chart, and let's see kind of what's going on there. Okay, so we had a huge buy. Somebody came in really big. This is a fund that came in really big. It was pulling back a little bit, and then the fund just came in and bought it. Wow. Just kind of want to see where this is at. All right, so okay, so yeah, you know what? I would be setting. I currently have my stop losses at 770. They'll probably, because I could see a little bit of a consolidation there. They'll probably be about 805 tonight. I'm probably going to move them about to 805 or so tonight. But yeah, this is good. You want to protect that gain because you don't want to round trip that profit, because getting a profit like that is just tremendous. And of course, once you cash it out and you sell it, that's expendable money. Just don't give it back if you can avoid it by pushing that stop loss up. Let's take a look at NEO. And of course, I like NEO a lot, as you well know, but there's some cloud on the horizon, and this is true essentially for all Chinese stocks. They're going to have to start complying with generally accepted accounting principles, and many of these stocks just don't have the chops. I mean, they are relatively speculative and thin on the institutional investment on it. So this is going to cause the stock to have trouble. That said, well, NEO's up today, so go figure. There's a very nice buy point on NEO at 57.20, as you can see, and this is on a second stage cup, and it's right in the buy zone. So currently, and I'm going to put this out there, NEO is in buy zone, and that basically is from about this 57.20 up. Let me give you kind of exact up to about at about 57 plus 5%, and so it's a second stage up formation with a 57.50 buy point. I'm just going to put that out there on the chat for everybody so that you can see that. And hopefully my spelling is not totally horrible. So really, to answer your question, is it a buy or too extended? No, I don't think it's too extended at all. I think it's right in a buy zone right now. And that's a very, very good question. At least as of today, it's right in a buy zone. Now let's just kind of give it the smell test. Let's look at the checklist. This is excellent. 8 out of 9. We have increasing fund ownership. The industry is great. Wow, we're right in the buy zone right now. We have a buy point. The buy point is 57.20. So definitely not necessarily a bad time for NEO at this point. So that may change, but right now it's definitely in a buy zone. Okay, hi Jim. Can we buy a stock at a 52? Absolutely. And this is, I thank you for this, Patik. This is a very, very good question. Now, it's a very strange thing. You would think, you would think that you always want to buy a stock when it's cheap, right? Well, actually, that's a very bad strategy because cheap typically in the stock market means getting cheaper. So we want to buy stocks that are in high demand that people aren't selling. I mean, that's the reason Tesla is going up right now is not because anything is fundamentally. Oh, they did come out with the Model Y. That's fundamentally changed. But the people that were willing to sell are not willing to sell. Essentially, the weekends have been washed out. So if you want to get Tesla, now you have to pay a premium price. That's why it's going up. Um, it hasn't changed from yesterday to today that much at all. But but because the weekends have been forced out, it's moving up. The same is true with, let's look at Party. When you buy it, it seems counterintuitive, but buying at a high is actually very good. As a matter of fact, you should never buy a stock. You should never buy a stock unless it's within 15% of its all-time high. As a matter of fact, back in 1999, I owned Microsoft. And then when the dot-com crash happened, it pulled back and I was sold out. And I was like despondent because I wanted to buy back in so badly. But I waited 18 years for it to come back. And in 2018, I started buying again at 68. And I did very well that year. But, you want buying at between, you want to buy at 15% of an all-time high in a stock, because sometimes a stock will never recover. It'll go way, way up, and then it won't ever recover. I mean, for forever. And it's done. I mean, take a look at Cisco right now. In 2000s, it was doing great. Today, it's a great company. They're selling a lot of stuff, but the stock has never returned to its high. So buying a stock at its high is very good. And you protect your profit by using a stop loss so that if it pulls back, you're sold out. Now let's look at Party. This is a Party Holdings, and it is essentially a stock. Now another thing I warn you on, and I keep sound like a saw here, but is to try to buy companies that are where the shares are over $10 a share. But it does have a very good relative strength. It's 99, which is quite excellent. So let's look at that weekly chart to kind of see. Well, here's the problem. Let's kind of take a 20,000 foot view. Well, you know what? I probably wouldn't buy this, and I'll tell you why. Because if you can see, way back in the Wayback Machine, it was up here, so it was above $10 a share. Now, I would start to be interested in it if this area here was basically within 15% of its all-time high, and I don't think that's the case. So I'm not really interested probably in this stock until it gets to this level. Probably it looks like about $10 or so. So that's I think you can look at the 52-week high, but I always like to look even further back on that. I like to look back to pretty much the beginning of the company on that. But absolutely, you can buy at the 52-week high. It's not a bad thing to do. As a matter of fact, it's a very good thing to do. Chegg had a nice pop today. I think it will run up from the double bottom. Let's look at Chegg. That's interesting. I was shaken out of this stock. I had this. I do think this is a good company, and the charts look very good. This is the problem when you're buying essentially a growth stock that is getting into the, that's moving, is that, sometimes you just can't, it happens quickly, and, you just don't get an opportunity. It pulls back and you're sold out. But this is a very nice chart. It looks like it's moving right up the 21-day exponential. That's a really good place to buy, by the way. This is a second stage cup. The pivot is at 89.99, and we're currently at 96. So we're just above the buy point on this. We're just above the buy point on this one. So the question is, I think it probably will run from the double bottom if it can hold on to this 89.99 level. If it can hold on to this 89.99 level, then I think it's very likely that it will run higher. Let's kind of look at some of the characteristics of this. It's got an 88. That's very good relative strength. Nice sales increases. 62% funds. I really like seeing that. We also have increasing fund ownership at 686. So that's looking very, very strong too. The checklist is great. So it totally passes the smell test, 8 out of 9. And let's look at those funds. Wow, we have some very, very good funds in there. And we have 686 funds. So wow, that's really good. My only concern, of course, is, this is the online. This is the company that has all of the online text and stuff like that. They're doing great in the pandemic. The only thing is that this is not a particularly hot industry group. 172 out of 197. Now, in this pandemic, it's done great because this is how they're distributing textbooks. So very, very good business model. Now, the question is, what's going to happen when we reopen? Well, I don't think we're necessarily going to go back to the way it's been before. So I do think that, fundamentally, it's probably a pretty good bet. Here's the thing. You could definitely buy it, but if you buy it at this level, it's going to be a little bit extended. But the double bottom is a very strong chart pattern. So in terms of everything else on it, I think it's looking good. The chart's looking good. We're a little bit extended. Maybe if it pulls back a little bit. I don't know if it will pull back, though. So, you definitely can buy them 7-8% extended from the buy point. It's not as good. You always want to probably buy within 5%, but that's not necessarily a bad thing, because if it's moved to the top of that range, that top of that 5% range, it's showing strength, and it definitely is showing strength. So, very good question. That's a good company. Chegg is a good company. Hi, Jim. Can you name a few top class cyclical stocks? Good question. Well, here's one I like, and I try to eat my own dog food as much as I possibly can. Unfortunately, I don't have money for all the dog food that I want to buy. But I like FCX because it's a mining company, and they haven't had a lot of love as of late. Now, I could be totally washed up on this, but I want to show you the chart anyways to see. This is a very cyclical stock. This stock is a copper mining company based in Phoenix, Arizona. And so, but it has a relative strength of 96, and you can see there's very strong accumulation by many of the firms. Now, here's a little bit of concern for me, is that their sales were down 26%. And this largely has to do not with their production, but with the price of the underlying price of the metals. Now, if we do get inflation, which I do believe is coming, because we are seeing that manifest itself in the price of Bitcoin, we're very likely to see increasing demand for gold and copper and those kind of things. So we're likely to see possibly some inflation when the market reopens. When the economy reopens. It's not for sure, but it's likely to happen. So this is a cyclical stock. What do you mean by a cyclical stock? When the cycle changes, this one can be a place that people are investing. The funds definitely like this one in terms of that. It's got a strong checklist. It passes on everything. The only thing it doesn't pass on, of course, is the earnings per share, and that really has to do a lot with the commodity price. So that is an issue. It's got 43% funds, which is really great, and quite a few, basically 1,453,000,000 shares. So it's a very large float, and it does have a lot of funds in it as well. So that's looking pretty good. The management has 1%. That's not significant. That's typical for a mining company. Typically, they're not going to be big owners of the stock because most of them aren't going to have been founders. Let's take look at the industry. This is what I really like, and this is sort of sector investing. And why is that so important? Well, it's a very unfair world, and especially in investment. Investment dollars typically flow to the top performing sectors. There are 197 sectors. Currently, the rank for this mining and metal ores is 3. When this changed from around, when I found that things were being invested in and had a 3 level. Remember, this summer, this is what we were seeing primarily with computer software. We were seeing a range like that. Now it's moved down since then, and this has moved up. So what I'm seeing, at least with this cyclical, is I'm seeing a lot of institutional investing. So this is one that I would kind of, potentially, that I think that I think is a, that is a symbol, and this is FCX, and it's free. Freeport McMoran. So let's do. I'll get that up on the screen there. Here we go. Oops. And that's the symbol for FCX, Freeport McMoran. So that's one that you might want to possibly take a look at on a cyclical. All right. So I have been neglecting people from TikTok. So thanks for holding on. Let's see. Let's talk about Chegg. CHGG. I'm sorry. CH. I think it's right. Yeah. CHGG. Is that right? That is. Did I get that right? Yeah. There we go. Chegg. Sometimes I get the. I don't get the right symbol. But this is a question from TikTok. Thank you very, very much for it. This is this is an interesting company in that it's done very well during the pandemic. It's based in San Jose, California, and basically what they do is that they have all the textbooks, but they're basically online. So the distribution for textbooks and printing and all that, they've got it all, and they're doing it very, very well. This is again, I was talking about this with the double bottom. This is a little bit extended from the correct buy point. The correct buy point, of course, being 89.82, and we're a little bit above that at 96.77. So, can you buy at this level? Yes, you can. It's not optimal. You want to buy that within 5%. So let's see if it pulls back a little bit, and if it does, I think you might have a buyer. This is a top-rated stock, and I think it has some very good legs because I don't think we're going to, even after the educational systems open up in this country, I don't think we're going to go back to the way it was before, where you go down to the bookstore like I did and buy those expensive books that you never read. I think it's all going to be online. So I think they have a really good business model. What sector do you think is the best performance this year? Well, that's very interesting. Actually, and this is going to be surprising, I do believe that mining and basic industries may be very, very bullish. That sounds very strange, but I do think that area, some basic industries, are likely to be very good. And that's one of the reasons I'm interested, at least for right now. We'll see what happens in Freeport McMoran. So that is an area that I do think is good. I do think we're going to see, I do think automobile manufacturing, so that's another reason I think we're going to see some pent-up demand for automobiles. The average age of an automobile in this country, in the U.S., is, basically 15, 20 years. So there's going to be some replacements going on there. And I think a lot of these people, many of the people are going to be buying electric vehicles. Of course, that benefits Tesla, but I think it also benefits GM. And I want to kind of show you the chart on GM. This is kind of a sleeper because I do think that this is actually, believe it or not, the number one vehicle company manufacturer in China, of all things. So there is a buy point on this one on a flat base, and this is so interesting, at least for me, because that is it's basically there is an absolute buy point. It's got a rating of 81. Now, would I buy at this level? Well, I think we might be able to do that. So let's take a look at the daily chart. Let's see if there is a place that we could possibly start wading in. Now, it's pulled back a little bit today, but it does look as if GM has a pivot at 46.71. So I'm going to put that out there. GM pivot is equal to 46.71. And of course, what that is a price is which you obviously that's the optimal price to buy it, but you can buy it prior to that. Now it's pulled back a little bit today. I always want to buy it on an uptick. Here's the thing: I may start creating a pilot position in my own portfolio at about this $45 level, and I would do that with a buy stop limit order. So if it exceeds this 45 on its way to the neckline here, which is the buy point, then I may go in with a half position or maybe a quarter position on that. So right now I wouldn't buy it because the trend line, as you can see, this little blue line here, it's pointed down. But as soon as it moves to the up, and you can see it moves to the upside, that's when I want to buy it. But I do think that this one potentially will be good this year. The relative strength, the smell test, 7 out of 9, that's very good. And we do have increasing fund ownership. And plus, they got rid of all their bankruptcy under the Obama administration, so they don't have any bad debt like Ford does. It's not like, as they say, the world isn't fair, but that's kind of the way it's gone, unfortunately. Let's look at NDTOY. I don't know that one. Running content, NDTOY. Let's see if I can pull that up. Let's see. NDTOY. I don't think that's. No, unfortunately, I don't have a symbol for that one. Sorry. I need a little bit more information in order to possibly do that. So I had plug at 35 and a sold call at high. Excellent. John, that's a great way to play it. That's a super duper way to play it. If you see a stock surging and it does have options, a very good way to do it, and I do this all the time, is to as it's accelerating, buy the underlying shares. You got to buy them in 100 blocks, and then look out about 4 weeks and sell a call option at essentially the next, at the best. At the best price. And that could be tremendous because usually what will happen, stocks don't move up all at once. They move up and then they pull back and they move up and finally they break through resistance. So that's a great way to capture profit. Congratulations. That's a great way to sell stocks. That's one of my favorite ways to do a stock trade is with that kind of covered call strategy. So very, very good on that. Let's look at Oxy. Oxy, of course, is Occidental Petroleum, and unfortunately, they literally overpaid tremendously. This is during the run-up. I can't remember the name of the woman who is the CEO. I don't think she is anymore, but she had to go begging to Warren Buffett because she had to close the deal to buy Anadarko. That's the name of a oil company. And in order to close the deal, she had to go borrow money from Warren Buffett at 13.5%. It was kind of a tragedy. I mean, but it may be coming back. I mean, I do think the oils are going to see some increased activity this next year as the economy reopens, because even though we are moving to electric cars, there's so many other things that require oil. Another one, by the way, is chemicals, and that's Dow. I think that's the one that you might want to look at there. But we are very close to a potential buy point at about 21. Now, I don't really like this stock, but it is running better. It's got a relative strength of 69, which is not horrible. Let's kind of look at the chart to see kind of what's happening. Now, my normal rule, of course, is not to buy a downward trending chart, okay? And this, up until very recently, was a downward trending chart. So, we were going like that. But it looks like we have bottomed. It looks like we have bottomed. Now, the question is, can we buy here? Well, actually, this is a little bit dangerous place to buy. I really want to buy right about here. Okay, it's 66, but that's a long way to go. That's a long way to go because it's 20. It's got to triple. But if it clears this little area here at about let's see if I can give you the exact number on that. If it clears about 2450, it's in 20, then I think we could possibly start looking at acquiring Occidental. Now, I don't like stocks that have this low of relative strength. But remember, the entire sector of oil and gas has been was affected by the tremendous basically deflation that we've been going through. If we get inflation, this sector will move higher. It doesn't really have a good checklist. The smell test doesn't really work on this one. It's only got 4 out of 9. So I'm really not that interested in it right yet. I just want to kind of look at the fund ownership. Now, and we do have decreasing fund ownership, but just barely. So it looks like we may have turned a corner with Occidental. Would I buy Occidental? I just don't know. I don't know if I'd buy Oxy. It just doesn't meet my smell test. But let's look at the big, and that's XON, which is Exxon Mobil, of course, and kind of look at that one. I think that might be a better bet. The oils are going to be tough. I mean, the oils are going to be tough. They've moved down so much, but yes, this is a better bet. Let's look at the weekly chart on this one. Yeah. Okay. We do have issues with this stock. I mean, let's not kid ourselves. We did have a downward trend it has been a downward trend. The question is, has that downward trend been arrested? Well, it looks as if there is a buy point on a first stage cup at 55. So, here's the thing. If I was looking at Oxy and I was looking at ExxonMobil, I would pick ExxonMobil, and I would want to see it move past the buy point of 55. But there's some bad signs in this industry still. I want to see a little bit more investment. A relative strength of 26 just doesn't, it's just not what I want to see. We have declining sales. I don't like seeing that either. And this is Standard Oil, New Jersey. This is a 100-year-old company. But the question is, are they going to be able to continue paying their dividend? I believe they are, just because they have such awesome financial resources. But this is a tough area. I really want to see more strength in this area before I'm interested in it. I think you're better off with the mining area, at least on the cyclicals short term, because I think there has been a lot of damage done to the to the oil sector. Now, if the Saudis stop pumping as much oil, and I think they're going to have to, or else they're going to go, they're going to go under, then we might go. Now let's look at Howard Ham's company. This is Continental Resources. You probably know about them. These guys are big in North Dakota. There is a buy point on it, consolidation single stage at 2164. I do like this better than Oxy, by the way. I think it's a better run company, and I think the chart shows that. But the chart is not good either. Look at that. It's just a downward trend. So the question is, we can't totally judge it because the whole sector has been hurt. But it's only a relative strength of 80, of 58. It's below where I would normally buy it. The checklist is also 44%, it doesn't pass the smell test for me. And it's a well-run company, and it does holding on to a lot of funds. But here's the thing. I just think that the oil sector in general, you just don't want to be in right now. I think we want to see more strength before that could be good. That could be good. Let's go to TikTok to see. Thank you very much. Let's look at Jeff Langston 5 DHR. Let's see if we can give you something on DHR. So I'm going to pull over to that chart. DHR. Oh, this is Danaher. Fantastic company. By the way, in full disclosure, I matriculated at Washington College in Chestertown, Maryland, many years ago when the dinosaurs ruled the earth, and one of my classmates was none other than the former CEO of Danaher. He's now the CEO of General Electric, believe it or not. So, kind of a interesting thing. I don't own any Danaher, but it's a good company. Not quite good enough for me, but still an excellent company. It does have a 68 relative strength. You were starting to see some nice investment in it. Of course, this is based in DC. We have 8 out of 9, so that's a very good smell test. It has a very nice, and it is increasing fund ownership. The only concerns that I have with Danaher right now is that it just doesn't have as strong a relative strength as I'd like. It has an excellent checklist, though, and I do like that. It's just the relative strength that is weak, and that mainly has to do with the fact that Danaher is a conglomerate that owns manufacturing companies, and many of them are not in the favored areas of the sectors of the economy. But it is a very well-run company, and I do like it, and it looks like it may be very close to a buy point on a second stage cup at 248. So if we're right now at 243, I think you want to see if it moves above 248. If it moves above 248, then I think you possibly could have you might want to have a quarter position of this. I wouldn't have a half or a full position of this one, but it looks very strong and it's got strong cash flow. So not a bad company, but there are better companies. Now, as many of the funds rotate into more of the cyclical type of industries, then I think you're going to see it move with a higher relative strength rating. But right now, it doesn't have enough relative strength to be, where I would invest. I like to see at least a, I like to see at least an 80 relative strength. So that's just the way it is. Ramesh, thank you very much. Let's look at DDD to see if I can give you kind of any insight on that one as well. DDD. And DDD is a triple D systems. And wow, look at that. Just I'm not that familiar with this, but ooh, okay, it's a fairly thin stock, fairly thinly traded. Kind of got a very noisy chart, but that's not necessarily a bad thing. 98 relative strength. Something must have happened because we have declining sales, but yet we have this spike. This looks like a classic short squeeze. Let's see if we have any short interest on this one. Trying to see. Oh, goodness. I'm just trying to give you some insight in this one. I don't know this one offhand, so yeah, 77 checklist, so that's good. Let's look at the ownership. It's got increasing fund ownership, and it's not a lot of funds, but 287 is pretty good. The industry sector is very good at 44 rank out of 197, so that's not bad either. What news is on this one? Well, let's see. Do we have any news on this one? 3D. Okay, relative strength. Okay. I can't really give you. The 3D printer market is good. It looks like there's some big people going in here. So, wow, this is very interesting to me. It looks like it's relatively thinly traded. You know what? I think you might be able to buy this one. Let's take a look. Wow. Okay, this may be an acquisition because, it's been kind of just, it's moving along at, $8 and $7, and then all of a sudden it just goes ballistic. It just launches. Wonder what that is. We just have some huge buying. This looks like some kind of acquisition is going on here. So there's some news here that I don't know on this one. Can you buy this? Well, you know what? It might be buyable if it can go above about that level. So let's look at it. I don't typically like to buy on charts like this, but you possibly could. I mean, let's see if this gives us. So at 23, if this thing goes higher, if this goes over 25, you might have a buy. I just would be very careful. When I see a chart like that, there's a reason. It's either an acquisition or a short squeeze or something like that. That's not a normal chart function, but it doesn't necessarily look bad. So I would be a little bit cautious on this one. Probably wouldn't buy it. I'd watch this one and find out why we had such a spike in the price on this. That's the key. Why do we have such a price increase? Oh, Nintendo. I'm sorry. Thank you. NTDOY. Nintendo. Let me see if I can get a U.S. symbol for the shares that are traded on the U.S. exchanges for Nintendo. I have a little bit of a freeze up here, so hopefully you're hearing the audio. Well, there we go. Okay, we're back. Nintendo, Nintendo symbol. I'm just going to look that up quickly because I don't know it offhand as well. Okay. NTDOY. Well, you're absolutely right. Typically symbols are not are basically 1, 2, 3, or 4 digits, not 5, like this one. But you're definitely right. So NTDOY. That's Nintendo. Let's see if I get. Yep, there it is, Nintendo, and it's an ADR. Okay, so that makes sense. If it's 5 digits, usually it is an ADR. So this actually trades on Tokyo, but it trades in the U.S. with American Depository Receipts. That's what this ADR means here. So that's why it was 5 digits. That makes sense. You'll notice it's a little bit choppy. That typically is true if it's trading on a foreign exchange, and then the ADRs are traded here. So let's look at the chart. Let's look at the weekly on this one. Yeah, it's a good chart. Relative strength is 70. I'm not quite liking that. We do have some nice sales increases, though. That's very good. That's a real bullish sign. Let's look at the smell test. to see, yeah, 8 out of 9. So that's a very good smell test. And of course, we have, unfortunately, we just don't have a lot of funds in there. Only 76 funds. Most of these funds are going to be, Japanese market funds. So there's not going to be quite as many, obviously, because it's an ADR. 77 out of 179 is the industry rank, so that's not bad. Would I buy it? Could I buy it? Where would I buy it? The last buy point on Nintendo was right here. Let's see if I can get it to show. Let's go to the daily chart to see if I can show that. Yeah, there it is. There's the buy point. It's 72.82. It's currently at 80.05. Is it viable at this level? You know what? I do think you could buy it. It would be essentially a bounce off this 21-day line. Didn't quite pull down all that way, but it looks like it's trading right on the 10-day line. I would potentially look to. This could be bought if it moved above about about the $80 level, which it definitely is. So it's probably buyable right now. Would I buy it? Probably not. And the reason I wouldn't buy it is because of the relative strength. It's too low from A70, and the earnings are only in basically basically in 3.5 weeks, which I don't. It's a little bit tight into the earning. I don't generally like to buy when the earnings are coming up so quickly, because usually, even if the sales are good, typically there is a fall off in earnings. So I don't like to typically hold through earnings. Well, thank you very, very much. We've come to an hour. I thank you very much for taking a look. I do have a website, of course, at www.Dallas Trading Floor. And we do have this thing called I would appreciate it if you would subscribe to my YouTube channel at youtube.com/Dallas Trading Floor. And I very much would appreciate that. Of course, that helps defray some of the costs here. And of course, I obviously like and do that kind of thing. We always think that is good as well. Basically, we should be back tomorrow. Well, back on Monday, because I'm going to be moving stuff this weekend, so I'm not going to be around for that. But till then, I should be putting out some short videos on how I trade certain things. And also, if you could jump over, if you're on YouTube and you want to jump over to see some short videos, I'm on TikTok as well. And the handle there is @JK Malone. So until Monday at 2:30, happy trading.